Thank you very much, Joanna. I've been doing this for a long time. I've probably made these presentations either on the PBS or on the monthly metric surveys for close to 30 years, if not more. But we think that there's tremendous value in tracking metrics to improve success for the under 100,000 cubic yard ready mix concrete producer category. So with that, I just want to mention that we are conducting this webinar in accordance with NRMCA's antitrust policy. We will be discussing numbers here. So if at any time anyone is uncomfortable and feels like we're crossing the line, please raise your hand and express your concerns, and we will stop and address your concerns before we continue on. So with that, this is what our goal is with the small producer metrics. There's really four. To help guide the small producer in learning how to track standard industry metrics, so this segment of producers can see how they compare to their peers. And that's really the most important part. Is you might be making money, but if you're doing as well as your peers, are you doing better than your peers, or are you doing less profitability than your peers? And that's really why you want to look at these metrics and compare them to your own performance. This can only be accomplished by tracking the most important industry measures to assure success and profitability. The small producer has his or her hands full operating the business, so this review can be accomplished in just a few minutes every month. Our ultimate goal is to help the small producer maintain their success by better understanding key financial metrics. The annual performance benchmarking survey measures a highly detailed variety of line items, from materials cost to delivery to selling, general, and administrative. What is most telling is the under 100,000 cubic yard producers are one of the most profitable segments of the entire industry, only second to the 100,000 to 299,000 cubic yard producers. And I should mention that only occurred here in the last year, that for a few years going back, the under 100,000 cubic yard producers were the most successful producers in all size categories. They were the most efficient and the most profitable. Small producers outperform a majority of the industry in efficiency and profitability. Here are some key differences based on the 2025 survey reflecting 2024 numbers. These numbers show under the 100,000 cubic yard producers versus the average respondent. So you'll see the under 100,000 cubic yard producers average selling price is $183.81 versus $169.18 for the average member. Their materials cost is right in line, even though they're getting this top line advantage at $94.54 compared to $94.24, almost even. Material margin is $89.27 versus $74.94. So you look at about a $15 difference to the good. And you can see in the EBITDA, it falls to the bottom line. It's $26.58 per cubic yard versus $21.83 per cubic yard for the average member. And by the way, for the average member, it was one of the most profitable years ever. So the performance of the under 100,000 yard producer is quite remarkable from that standpoint. The problem with the performance benchmarking survey is that it only measures financial and operating performance once annually. It's a very large questionnaire. It can be daunting for small producers who don't have an entire accounting department. Some of the participants, like our friend Marcia Salisbury, who's on this, slugs through that and participates and has for many years. And she would be one of the ones to attest that participating is really worth your while. There is a different survey. It's called the Monthly Key Metrics Survey, which allows small producers to measure their performance against the rest of the industry. This is just a guide, as you will see that the small producers substantially outperformed the respondents in the key monthly metric survey, which tend to be far larger companies. That typical respondent produces in excess of 1.1 million yards annually, so their margins are much thinner. I do want to mention that the key monthly metric survey, some of our friends, CFO friends in the industry tell us it takes them 5 minutes to fill out the questionnaire at the end of the month. Just a handful of metrics that are quickly extracted from your data and entered into the template. Participate in, our recommendation to the small producer is to participate in and study the results of the annual performance benchmarking survey. You can gain so much by learning the areas where your company outperforms and where you underperform. Do the same thing with the monthly metric survey. It's so easy. It's 5 minutes once a month. It will give you some great opportunities to view the measures of other companies in this industry throughout the United States. You can only obtain the results of those surveys if you participate. They're both free. They're part of your NRMCA membership, but you have to participate to see the results. In the monthly key metric survey, you will see that you outperform the survey respondents in almost every category. And the reason for that is there are just much more layers of cost in the million-yard plus businesses, and the small producers tend to be very efficiently run. So you'll see that your metrics outperform the average in the monthly metric survey month after month. There's never been an occasion when that hasn't been the case. Carefully study the percentage movements among the respondents and compare them to yours. For example, in the April monthly survey, the rolling 13-month average sale price grew from 165.14 to 170.83, an increase of 3.4% in sales price growth. Did you increase your selling price by that same percentage or more? That's where those percentages can help you. Track all other monthly metrics by percentages to make sure your company is in line with the rest of the industry. What do the surveys cover? The monthly key metric survey covers the following items: the total cubic yards produced in the month, the average sales price per cubic yard in a standard meeting, the average materials cost per cubic yard in the standard meeting, the average material margin per cubic yard in the standard mean. A very interesting metric, the total licensed and insured ready-mix trucks and cubic yards per ready-mix truck. That's a great measure of efficiency. The performance benchmarking survey is a great deal more in-depth by quite a bit. It measures variable costs, which is your materials cost, your plant, and your delivery costs, are your fixed costs. So if you have a cold day or a rainy day, you've still got fixed costs that are occurring even though all the plants are closed. Your total SG&A, your fixed costs, which is direct expense plus sales expenses plus G&A plus interest, which gets to your total expenses, and that brings us to an EBITDA number. I want to take a second and talk about EBITDA before we get off this slide. And it's a very important measure. We were one of the first firms in the 1980s to start identifying EBITDA. EBITDA, or earnings before interest, taxes, depreciation, and amortization, measures four things. It measures the amount of free cash the business generates to, number one, make down payments on equipment purchases. Number two, to make the principal and interest payments at the bank for the portion of that equipment that you finance. Number three, your cash taxes. And number four, any dividends or distributions to the owners. So if you're a very profitable business, number four can be a big number. but it's an easy way for you to plan on what you can afford to spend on equipment. When you've had a tough year, there's less free cash flow to do that. In a good year or good years in a row, there's plenty of free cash flow to make those equipment investments. Let's take a look at the most recent PBS. Under the 100,000 cubic yards, total cubic yards participated that produced was 840,000 cubic yards by 17 producers. So the average respondent was really a 50,000 yard producer, not a 100,000 unit producer. So for those of you that are in that category, this is very meaningful data. Average price per cubic yard, which we talked about in the previous slide, was $183.81. The materials cost we also discussed was $94.54 at 51.4%. That is well ahead of the industry average. And your average materials margin per cubic yard was $89.27 or 48.6%. It's a small producer, so there's only 17 ready-mix trucks. Cubic yards per truck were well below the industry average of 29.27, but that takes into consideration a lot of seasonal participants in this business who are not delivering concrete year-round. Variable costs were $135.47. Total fixed costs were $20.71. Total SG&A was $10.02. Fixed costs, direct plus sales expense plus G&A plus interest was $31.28. Total expenses was $166.75. You subtract that from the $183, and you have EBITDA of $26.58. So these are very, very profitable small businesses. Summary. What does this mean? There are 11 significant line items that a producer should follow as per the prior slide. These 11 metrics total to the all-important 12th line item, which is EBITDA, the measure of cash flow the business generates. The monthly metric survey is a small commitment of time for busy producers, but can help enormously in understanding how a small producer is performing. Although a greater investment in time is needed to participate in the annual performance benchmarking survey, the detail this benchmarking tool offers is invaluable to any producer. We want to encourage, with only 17 participants, we should be getting far greater participation given the number of small producers that are represented in our membership. And that's something that the Small Producers Council is going to continue to try to press our members to participate as we come upon that survey in the first quarter of 2006. Summary of our goals: refresh current small producers on how to maintain their success and produce concrete more profitably than any other category in the industry. Provide metrics for prospective participants considering whether or not to participate. Expand the number of participants in the Small Producers Council from the current level, and create a network of members who share best practice. So with that, thank you. And I'm pretty on time here, 15 minutes, I think.